Welcome back to Investing Talk Podcast. Today, we're taking a closer look at SAP, a really significant player in the world of enterprise software. You provided us with a range of materials company info, recent performance figures, financial health assessments, expert opinions, and more. And, well, our goal is to extract the key insights for you. We want to provide a clear and valuable understanding of SAP's current situation, helping you see through the complexities and focus on what truly matters. We'll be exploring their core business, their recent financial results, what analysts are saying, and potential paths they might take in the future.
Okay, so SAP. It's a name we hear a lot in business, but what fundamentally are they doing?
It's quite something when you look at SAP's reach. This is a major European software company based in Germany,
Mhm.
and they are the largest provider globally of enterprise resource planning, or ERP software.
ERP, right.
Yeah.
The backbone for businesses. Pretty much. Think of it as the system integrating all the essential functions. SAP offers this huge suite of products and services
Yeah.
designed to streamline operations across all sorts of industries. So, managing accounting, supply chain, employee data, chances are SAP is involved somewhere.
That definitely paints a clear picture. And it looks like their strategy now is heavily focused on cloud offerings. I'm seeing things like Cloud ERP Suite and Rise with SAP mentioned.
That's a very deliberate shift, yes.
Yeah.
They're pushing hard towards cloud solutions. Their cloud ERP suite is, well, their main cloud-based ERP system, comprehensive capabilities delivered online.
And Rise?
Rise with SAP is more of a whole program, really. It's designed to help businesses migrate their existing on-premise systems to the cloud. Think of it as a guided path to modernization.
Got it.
And then you have the key products, the traditional SAP ERP, the newer SAP S/4HANA, and increasingly important, the SAP Business Data Cloud. That last one is particularly interesting because it's bringing in AI and advanced data handling. It's not just about putting software online. It's changing how businesses use data.
Okay, this is where it gets interesting. Let's talk performance. I see some stock price movement recently, but wow, a really big jump over the last year.
hmm
What stands out most to you there?
Well, the daily range in the past month, roughly $253 to $261, doesn't screen huge volatility day to day, but it's active. But that almost 70% surge in 2024 that really catches the eye seems
Hmm.
tied to their cloud success and maybe some smart partnerships.
That's a key observation. The market has definitely responded well to SAP's cloud revenue growth and the alliances they formed. That kind of increase, outperforming the DAX and Nasdaq Q100, signals real investor confidence in their direction. It suggests belief in their future in this tech landscape.
Right. Now, let's maybe dig a bit deeper into the financials. We've got revenue for 2024, forecast for 25, net income, EPS, quite a bit here. What are the crucial numbers for you? Well, looking at the financials gives us a clearer picture of their health. Revenue growth is obviously positive, seeing $34.18 billion in 2024, up nearly 10% from the year before, and then projecting around $38.3 billion for 2025, another jump of almost 12%. Those are strong top-line figures. Suggests expansion.
And the earnings per share?
The trailing 12 months EPS at $2.74 is one figure, but also the non-IFRS EPS for Q4 2024 showed a 24% year-over-year increase. That's significant. That non-IFRS is important. It often adjusts for one-off items, giving a maybe clearer view of core operational earnings.
Okay, but then there's this note about net income actually decreasing in 2024. That feels like a bit of a flag, doesn't it? Especially with revenue going up.
That's a very sharp point. You're right to flag it. A drop in net income when revenue is climbing, well, it definitely warrants a closer look. It could be several things: higher operating costs, maybe big investments in R&D, or costs tied to that cloud transition itself. Investors really need to look into the details in the financial statements to understand why. It's something to watch.
Okay, so point of caution. But then their leverage ratio looks pretty reasonable at 1.3. Can you break that down simply?
Sure. The leverage ratio basically compares debt to equity.
Mm.
A ratio of 1.3 suggests SAP is using a, let's say, prudent amount of debt relative to its equity. It means they aren't overly reliant on borrowing, which is usually seen as a good sign for financial stability. A decent balance.
Makes sense. And free cash flow, estimated around $8 billion for 2025, and it's trending up. Why is that important?
Free cash flow. That's the cash generated from operations after they've paid for investments like property and equipment. It's vital because it's the money available to, well, reinvest in growth, pay down debt, give back to shareholders via dividends or buybacks, or make acquisitions. And increasing free cash flow suggests better operational efficiency and more financial flexibility. It's a strong sign of health.
Now, valuation. We see a price-to-earnings ratio estimated around 38.5 times for 2025, and price-to-book around 5.42. Those seem, well, high. What's the market saying there?
You're right. Those are definitely elevated multiples compared to, say, broader market averages. A high PE usually means investors expect strong future earnings growth.
Yeah.
They're essentially paying a premium now for profits they expect later. Similarly, a high PB suggests the market values the company's assets and growth potential highly compared to its book value.
So, optimism, but maybe a bit pricey.
Exactly. For SAP, it reflects the excitement about cloud growth and their strategy, but it also means the stock might be considered, richly valued. There's less room for error if growth doesn't meet those high expectations. It puts pressure on them to deliver.
Okay, so summarizing the flags and strengths, watch that net income dip, but the strong cloud revenue growth, what was it, 17 billion in 2024, plus partnerships like Databricks and that huge cloud backlog, over 63 billion. Those are big positives. That backlog number really stands out, shows future revenue.
Precisely. That backlog represents contracted future revenue.
Right.
It gives a degree of predictability to their earnings and signals strong demand. It's like having future sales locked in, to an extent.
Let's shift to market sentiment. It seems analysts are generally positive, focusing on cloud and AI.
That aligns with the information, yes. The focus on cloud expansion and integrating AI seems to be driving that positive view. SAP's commitment to innovation, like launching the SAP Business Data Cloud, and also sustainability efforts like the Africa Forward initiative, probably helps market perception too. While we don't have specific ratings here, the overall tone seems confident in their strategy.
And competition, Oracle and Microsoft are mentioned. How does SAP stack up?
Yeah, those are the big ones in enterprise software. SAP is still the leader in ERP. That's their home turf. But as everything moves more to cloud and AI, the competition gets fiercer. SAP has strong cloud ERP market share, but they need to keep innovating constantly to stay ahead of Oracle and Microsoft, who obviously have massive resources and cloud presence too. It's a tough race.
Looking forward then, what could really drive SAP's performance? Potential catalysts.
Well, upcoming product launches will be key, especially anything new in AI and cloud. Earnings reports, naturally, are always crucial for checking progress against their goals. The general availability of their SAP Green Ledger solution could be interesting too, showing their focus on sustainability tech. And just continued adoption of their AI features, like the business AI updates from Q1 25 aimed at boosting productivity. Those could add real value for customers.
On the flip side, what are the potential headwinds? The risks.
There are always risks.
Yeah.
Regulatory changes, especially around data privacy and security, could impact them. Broader market conditions matter too: interest rates, currency fluctuations, especially for a global company like SAP. And sometimes restructuring efforts, while aimed at long-term efficiency, can cause short-term disruption or uncertainty.
Interesting that just this month, April 2025, they pushed out 20 security patches. Seems pretty significant.
Absolutely vital in today's world. Releasing patches for critical issues like code injection and authentication bypass shows they're focused on security. It's essential for maintaining customer trust, which is, well, everything in this business.
So let's try and pull this all together. Based on everything we've discussed from the info provided, what's a concise recommendation for investors right now?
Considering the strong cloud growth, the partnerships, the innovation, but also the high valuation and that net income dip, a hold seems like a reasonable stance for current investors. They're clearly moving in the right strategic direction in key areas.
But for new investors,
For new investors, given the valuation and maybe some recent volatility, perhaps waiting for clearer market conditions or seeing how the next earnings report or catalyst plays out might be prudent. It allows for maybe a bit more data before jumping in.
right. So there you have it, a focused look into SAP based on the information shared. We've covered their solid ERP position, that impressive cloud growth, and their push into AI. But yes, the net income question and the current valuation are points to consider. We hope this breakdown gives you a much clearer picture. What really stands out to you from all this? What other questions does it spark for your own research? Please do subscribe, like, and comment. Let us know what other companies or topics you'd like us to explore in future deep dives.